my colleague, Mr. Farah bin Sulaiman Farsi, the CEO of the company, Mr. Bikram Bonga, GM Risk and Controls, Mr. Ram Kumar, the Head of Finance, and Nirosh is our Deputy Head of Finance. We will be allocating sufficient time for your questions at the end of the discussion. We go over the slides. Therefore, please activate the mute buttons during the presentation. Can you show the slide?
You have the slides on the picture?
Can you show the slides? Let's wait a few minutes because some people are joining. We will start the slides now. Our CEO will cover the part of the slides and then he will roll it over to the attendance.
Thank you so much, Jum'a, for the introduction. Good afternoon, all, and I would welcome you to this discussion session, wherein we will briefly cover various aspects related to our company industry, financials, updates, and our business focus. We will start by giving you a brief overview of a national finance company. Then we will review the leasing finance sector in Oman and the company's financial results, and conclude the discussion with the company's strategy and focus points during this year. As you see in this slide, we cover the visions and mission and values of the company. Basically, the vision, we aim to be the top choice for financials and leasing solutions in our markets. Our mission is to provide timely and appropriate financial solutions while creating an inspiring workplace for the hardworking employees who believe in our company. Values, as mentioned in the slide, briefly, we value transparency and honesty. We foster personal growth. We build trust through integrity, honesty, and transparency. Also, we strive to offer market-leading services that consistency exceeds expectations. And we also empower our staff to make the right decisions. Now, look at the company's national finance company was established in 1987 to operate in the field of leasing finance in the Sultanate of Oman to finance individuals and institutions. And in 1999, it was listed in the MSM. And in 2019, the company acquired another fund. It's one of the major highlights I'm focusing here on this slide. So in 2018, as you see, the company acquired another financing company, Oman Orex. And as well, the company leads the leasing finance sector with a market share of 48%. And last launched their new brand identity in 2023. Still keep it the same now. If you look at the results as well in 2021 and first half of a full year, it was about 8.6 million. And 2002, we covered about 10.1 million. And in the first half of 2022, it was about 5 million. In 2023, first half, about 5.4 million. So increase about almost 8% the profits. In this slide, we cover the geographical presence of national finance. This slide, as you see, we market share, we have about 45% asset. The companies that are present in all parts of Sultanate Oman to serve our valued customers through 21 branches distributed over their governance. Number of our employees is more than 100 employees to serve the customers.
If I may request the guests to please keep their microphones on mute. Thank you.
In this slide, we talk about our products and services. As you see, we have the table at the bottom shows as well the main finance solutions like corporate finance. We have corporate deposits and retail finance and investments. This is in brief. This slide shows you the company shares are distributed as shown in the right of the screen. Omninvest owns about 34%, and Al Hilal owns about 29.43%, and the others owns about 35.97%, almost 36%. This slide also gives you a brief as well about our board of directors. As you know, after the March, our AGM, we also have a new chairman, Sahan Zubair, and the rest, of course, Abdulaziz Al-Baluchi also became the deputy chairman of the company, and our also ex-chairman, former chairman, became also a director of the company. And we also have the remaining of the board of directors as it's seen in this slide. Executive management team, including, of course, distinguished team that we have in this table. Myself, of course, Jum'a Khamis in my right side, and Bikram. Jum'a, of course, is the Chief Operating Officer of the company, and Bikram Monga is the Chief Risk Officer. And we have also Said Khalifa Al Saeed is the Chief People Officer. And we have also a new joiner who joined us recently. His name is Sam Al Habsi. He's our Chief Remedial and Recovery Officer, and he's a DGM. So industry overview in this slide gives you a brief about currently there are about 5 finance leasing companies in Oman with 40 branches full network under the license of Central Bank of Oman. Non-banking finance and leasing company FLCs in Oman play the role of financial services sector and segment as well, and also the financial services market. And this slide will also gives you a brief about overall about our market shares in national finance. We present about 45% of our market share and 55% the other leasing company. Our profit also it shows here we cover about 54% in the first half versus 46% from the other leasing company. If you look at the chart on the left side, it gives you the growth of the loan books from the beginning of 2020 up to 2023 first half. If you look at the 2020, the total portfolio about 883 million, which also that COVID period, which also went less about 2.38%, and then the book grew again in 2022 to reach to 2023 first half with 976 million Omani, total of 5.51% growth in the loan books in leasing companies. This is from my side, and I will leave the slide for financial updates to Mr. Jum'a to cover the rest of the slides.
The loan book, if you see the growth of the loan book, National Finance has grown by almost 4%. Our net loan book reached to 441 million. The borrowing portfolio is actually diversified between the bank borrowing and fixed deposits, as shown in the top part of the slides. The total equity has declined from 119 at closing of 2022 to 101, which is due to the retention of the perpetual bond which happened during this year in March 2023. This slide will give you a snapshot of our profitability, where we show the income from financing activity had grown by 8%. The financing cost has been growing by 22% due to the redemption of the perpetual bond and the increase in the portfolio, and also the increase in the market rates would take you to the net financing income to 12.5 million. Our other operating income is in line with the last year, which is 1.2 million. The net income comes to 13.8 million. And our operating expenses is in line with the last year with little marginal increase. Our provision is actually provided with as per the IFRS standards, and the net profits came at 5.4 million, which is, as the CEO mentioned, 8% more than last year. In these slides, we are showing the growth in our return on equity. National Finance always being providing very decent return on equity. Due to the COVID-19, the return on equity was a little bit less, and we are now bringing the company back to the double-digit figures, as we show in first half of 2023 with 10.4% return on equity. Our cost of income is in line with the trend of the previous year and the years before, with a little bit increase due to the financing cost. Our net assets per share is grown by 175%, and it is worth mentioning also our market share is also grown. Our share is being traded last week 166 paces. The right part of the slide shows the quality of portfolio. Our infected portfolio is in line with the industry with 16%. However, the coverage is decently provided. We closed the half of the year by 67% of the cover, which is decently good, and we are planning to increase that as well. The business focus going forward, CEO want to cover this area also? So our concentration is we are focusing on building a healthy portfolio, and our focus is mainly to the healthy retail portfolio. And also we are building a very solid relationship with our major auto dealers and second-hand dealers as well. And we have been investing in our digital platform to serve our customer better. So we ensure full utilization of our digital channels to secure businesses. And also we are focusing in new streams of income where we introduce new products as per the license given now by CPO. They gave us a window to enter in new products. We are capitalizing on growing our books in line with CPO regulation. And we are also building up our branch network. We are the biggest network we have in the country, and we are capitalizing on that to maximize our customer satisfaction. This is our key contacts for future use, and we will open the floor now for questions and queries. Any questions?
If there's any questions or inquiries, we'll be happy to answer them.
I think Kristen had a question.
Hello.
Yes.
Good afternoon, gentlemen. Thank you for the presentation. Just had a couple of questions. Good set of numbers, very good results. If you could just shed some light, and you mentioned your H1 numbers, but if you could just shed some light on the provision number for the second quarter, because it's unusually low, 68,000 for the second quarter, which is not in line with what we've been seeing for the last several quarters. So if you could just talk specifically about the second quarter provisions first, please.
Yes. The provision, yes, if you look to comparative to the same number of last year's, yes, it is lower. Last year, we have provided a decent provision to cover the restructured and deferred portfolio, which is continue in the books. So this year we actually follow IFRS requirements, and we haven't provided more for this portfolio, which is decently covered. The overall coverage of the portfolio is 67%. which is very good at this point of time. However, we are looking at the customers where we need to add. We will add in the next year. Half the year.
So if I am to understand this correctly, your last year, just to give you a comparison, 2021 provisions were 3.6 million, 2022 provisions were 4 million. The first quarter of this year, the provisions were 937,000, and now we have 68,000. So if I hear you correctly, you will maintain or be around the second quarter provisions for the rest of the year?
So the provision is built due to the MBA. The growth in MBA for this half of the year is less the provision growth in last year. So actually we are in line with IFRS 9 when we are building the provision. So if you look to the MBA is marginally lower this time. So this is why we don't need to provide more for the next half.
No, I understood that. I heard you clearly about IFRS, but my question is, going forward also it will be the same trend, or this is a one-off in the quarter? I'm just trying to understand from that. I understand how IFRS works and I understand your provision coverage, but with this, so if you understand me correctly, your run rate for provisions is between 850,000 to $1 million riyal on a quarterly basis for the last 10 quarters. Second quarter of this year, we noticed that number significantly declined to 70,000 riyals from a base of 800,000 riyals to $1 million. Now, I'm just trying to understand whether the reality is 800,000, whether it's 70,000, whether it's somewhere in between. So if you could just explain that part.
Yeah, but as I mentioned earlier, last year we have building an overlay in the top of the provisioning requirement due to the deferment and restructure. This year that deferment and restructure is not anymore there. So what we have built, so the trend will continue. However, we are reassessing our portfolio where we need to provide more for specific customers. The management is willing to build an overlay on those customers.
Okay.
If I may just add on the same point, the whole thing is based on performance to start with. And then if we look at it, we've as Jumal said, over the past couple of years, we've actually taken a significant amount of management overlays to be on a conservative side. So the run rate that you're talking about is not really a regular run rate. I mean, you should compare it to the previous years as well. So again, the hits, the addition in this quarter has been lower because of the portfolio. So that's how.
Okay, fine. All right. Okay. Now, next could be sure.
82 million of NPA, but in the second quarter, and it has reduced to 79 million. So obviously there is a recovery of the NPA, so that's why the provision in the second quarter is less.
Noted. Okay, fine. Sure. So just trying to understand the trend going forward. The next question would be on your provision coverage ratio. You mentioned it's around 69%. Now, is that you mentioned you're comfortable with that level? What would be the, let's say, next 12 to 15 to 18 month plan on the provision coverage? So let's say by next year this time or by 24 end, what would be a target provision coverage ratio for the company?
Yeah, this 67% we consider to be in line with the industry. However, we are actually hoping to increase the coverage to a level of 70%.
Okay, fine. Sure. Just wanted to understand your thoughts on that. Okay, that's fine. Next is more a generic question. I mean, the company is doing very well. It's a market leader in terms of market share. Now, what we've seen in the banking sector is, we've seen one consolidation that's about to complete this quarter. We've seen some other consolidation news that's, been floating around. As the sector and the market leader, what are your thoughts on consolidation for the leasing sector? How do you see, a consolidation in the leasing sector? What are your views on the same?
See, the opportunity is always there in the market, and we're also observing very closely. But we haven't decided yet as a national finance. We haven't taken any steps yet, but we're observing the market, and we know there's opportunities around in the corner. But yet we haven't decided anything as we speak.
Okay, fair enough. So you're open to explore, but it depends on the right opportunity.
Absolutely. I mean, we're all, I think we're here to enhance return for our stakeholders. So, and to be providing the best service to our customers in Oman. So, we're ready to, we're open to.
All right. Sure. And if I may just ask one last question, sir, what would be a target ROE for, for the company for, let's say, 23 or 24?
Yeah, Bistan, I mean, if I may, we are actually focusing in these sessions is to in the performance of the half year past 2023. So we are not in a place of putting in the future forecast. But however, we are actually committed to have very decent return to our shareholders. As I have mentioned, we are planning to stay in return of equity of double digits, inshallah.
Noted. All right. Thank you so much, gentlemen. Wish you all the best.
Thank you so much. Thank you.
Mr. Thanks. Other questions, Mr. Gupta?
Yeah, hi. Thank you, gentlemen. Nitika here from Mubarak Capital. Thank you for taking my questions. So I have two questions. One is that we have observed an increase in the cost to income ratio. Like you explained, there is a bit of increase in the finance cost. But, so I wanted to understand what would be a sort of normalized level for the full year 23 in your view for the company, because it has increased a little over the last year.
Yeah, in fact, the cost of income increased, as you have mentioned, the major player is the cost of fund. Cost of fund is in the growth in the market. So we are expecting the same level of the cost to income for this year. And I hope the interest costs will relax by next year to bring it to the normal where we are hoping actually within 40s level.
Okay. And thank you. That's helpful. And secondly, I want to understand. So we've heard of, the CBO had announced more regulatory changes. So I wanted to understand if you have seen the benefit on ground yet, or, what is the sort of improvement you see through the year coming from those regulatory changes?
Yeah, I think it's still in pretty nascent stage to comment on whether, what kind of returns that would bring. I mean, yes, there are new products which will be launched by everybody in the market. I mean, most of the players in the sector. So it's again, these products, most of these are already being offered in the market. So these are not brand new products. So again, it'll now be available to a more diverse customer base. So it also depends on the broader economy, how the economy will grow, and then cater to the needs of.
Well, again, just to add that that having this new products, it is an addition for the leasing companies, and I think it's putting us in a map along with banks. Though the banks have the privilege of having personal finance and the rest of the products, but having a leasing company, I think that's a good start. And from Central Bank of Oman, and I think this portfolio, most of the portfolio will grow certain percentage for sure. But still, I think it's a bit early to talk about the profit expected or even revenue expected from this bonus as well.
All right. Thank you and all the best.
Thank you so much.
Thank you.
Thank you.
Any further question? Matthew?
Joyce.
Okay.
You on?
What's the name?
Yeah. Joyce. You can speak up, Joyce.
Let's go ahead, Joyce.
Am I audible?
Yes.
Yes, please go ahead.
Hi. Hi, good afternoon. Good afternoon, gentlemen, and thank you very much for the presentation. Mine is a follow-up question on the NPL side. So you mentioned that your NPL has increased during the course of this year from 75 million to 79 million. But I'm seeing a quarter-to-quarter very big seasonality or very big change in the NPL levels. Because in first quarter, your NPL has shot up to 81 million, and now it's down by another 2%, and it's down to 79. So I just want to know what has caused this major volatility in the NPL side, particularly when you're changing it from stage 2 to stage 1, but at the same time, stage 3 is still remaining at the similar levels as last quarter. So, can you throw some more light on the trend of NPL and how do you see the NPL going forward?
Yeah, see, actually, the impact of the restructure and the deferment yet to be seen. Yes, what we close the numbers at, we are happy to add these figures, but we are expecting more of MBAs after the deferment period is over, which is beginning of the next year. However, we are very positive on the performance of the market. We see cash flow. We see customers are paying out. So the result is better than what we expected. And if you look from the conservative point of view, so we see this level of the MBA still is good, which is 16% of the portfolio, and we are planning to get it a little bit lower by the end of this year.
Okay, but Mr. Jamal, you just said that the effect you are expecting some impact from the restructuring results. So how do we see 2024 looking? When we look at it from here, what's your view for 2024?
What has happened actually? We have built an overlay of those customers based on the CBO circulars and based also in our management overlay. For all these restructured accounts, we have built a decent overlay in terms of the provision. So actually, we can time out those customers, and I think we can absorb it by 2024, 2025. So I don't see a big challenge coming forward from this portfolio.
Okay, fine, thank you. And how is the structure of this NPL bucket? Are we seeing new names coming into the bucket, or are we just seeing the older names just getting recycled again and again?
A good question.
It's a factor, yeah. Sorry, it's a factor actually. A lot of names coming in, a lot of names also going out. So maybe you can elaborate.
As we said, we have a portfolio of more than 52,000 customers, active customers. So it's like new customers do come in, old customers go out. Our staging and our NPA is strictly based on a few factors. One of them being days past due, and then if there are any overlays by the management to downgrade the customer. So again, if a customer has more bounce checks, we would go into stage 2, stage 3, and would get reverse the pay.
And plus, Joyce, if you look at the last 2 years finance that National Finance did, we were very careful to lend, especially when it comes to corporate banking. We focus basically on retail banking now, retail finance, rather than having corporate. Even corporate, we do this finance, but we are very careful. We take our extra caution. We take our extra collaterals before we finance those companies. So even the volume-wise, when it comes to volume-wise, we became also very conservative. We want to make sure that our NPA, because it's a question you ask, if you have any new NPAs coming in, maybe the old NPAs, maybe 2018, that will basically be the 60% of the portfolio of the NPA or the legacy of 2018 after the merger. But now, for the past 2 years, our NPA is very steady. I mean, and number of accounts which goes to the NPA very, very minimal. That tells you that we are very careful of our financing, and also we take extra caution into our announcements. Yeah.
Thank you, Mr. Taik. That's very reassuring to know that. Thank you very much. And on your funding side, how do you see the cost of funds moving during the first half of the year, and how do you see the trend going? Because what I see is you have one of the most highest level of fixed deposits from the customers. So and given that there is a lot of new regulations that has been introduced by CBO, what's your strategy on the funding side, and how do you see the cost of funds going forward, panning out going forward?
The cost of fund, actually, you are right, it's increasing, and we see the increase is also happening. There is expected one more hike from Fed rate in September. But however, I think at that level is still it's good. We are hoping also funding cost will relax by next year, and also we are exploring different way of funding our portfolio. CBO has opened a window fixed deposit as well, and they relax more on the minimum 10 years expected. So I don't think that would be a big challenge. I mean, more than what we are actually absorbing in our portfolio as of now.
Okay. Thank you. Thank you very much. That's it from my side. Now, wish you all the best.
Thank you so much.
Any further questions before we close? I'll wait for a few minutes if there's any further question.
It's a good question regarding the cost of funds. We will manage as is. I'm trying to make the same level for the year. We'd like to hear them. Joyce, because I'm just otherwise, I would like to thank everyone for attending our session today. It was very useful questions, and we hope that we're going to meet our also shareholders' expectations. And also, we'd like to thank Central Bank of Oman and CMA and Muscat Security Market for their support and guidance all the way. If you have any.
Thank you very much.
Thank you. Thank you all. Thank you for taking time to come to our meeting. Thank you.
Thank you so much.
Thank you very much. Thank you.